Hi everybody, welcome to another update on the stock screener. This is a live update on Horizonte Minerals, which is crashing 50%. I actually looked at this company just a few days ago, and my assessment was positive because of the NPV value, which is actually higher than the EV. But why is it down 50%? So it was at 2.21. Right, 2.21. Nothing special going on. And now it's down 50%. So probably 1.21. So let's use 1.21 now. You can see that it's now much cheaper. So is it actually a buy or not? This is one of the largest nickel producers and is expected to have 60 million pounds of production. So yeah, maybe it's a good buy now at half price. It's now only 500 million enterprise value because of the crash. Yeah, because of the crash, it's now only 500 million enterprise value. At the balance sheet, we see current assets of 200 million and liabilities of 350 million. Okay. They do have some debt. But let's look at the news release. So why is it down 50%? Let's see why it is down. Completing the engineering and construction design, line 1. So they have different lines. This is phase 1, phase 2, phase 3. So first we have phase 1, phase 2, and then eventually phase 3. Okay. And there is a change in the design and execution. Yeah, that's a bad sign. Increase Capex by 35%. Yeah. Delay first production to Q3 2024. So probably it's going to start in 2025. So we can delay this whole thing by 1 year. So I do this and I delay it to here. And this is 0, right? Why did this? Okay, yeah, that's not the right way to do it. I need to paste this here. Okay. So delay by 1 year, that's Actually not too bad, but Capex. So what is a Capex change? At least 35%. Let's say 40%. Or 50%. So the Capex was 270 million, and now the Capex is times 1.4. Yeah, then the whole curve shifts down. Whole curve shifts down. And this is the Capex of 208 million. Okay. And that's the problem with high Capex companies, because if you have a Capex overhang, it could just bankrupt the company because the high Capex. If you have a low Capex company, then Capex overhang won't have a lot of effect on the project. But this one has a huge effect because it's a very large Capex project. So a 35% change will have significant impact. And then there's some explanation here. Yeah, and there's still the feasibility study on line 2 that's coming. Probably we also have a Capex increase on line 2. So that also needs to be taken into account. So here, this is the 200 million for the line 2, which is delayed actually to here. And that probably also has a Capex overhang times 1.4. And then you can see that yeah, this project has a lot of negative cash flow. 400 million, 300 million, that's 700 million in negative cash flow. Now, the project is still okay. It's still higher than the EV, but I think they will do a private placement or some debt issuance because they now have higher capex. They don't have enough money. 200 million, 380 million. So I'm going to expect another private placement below market value, and that will dilute everything even more. So I would not buy it until it's financed. So I expect another financing to come, and maybe after that you can start buying. But as you can see here, it's a very high risk. Sometimes these projects that are in construction can go down 50% by in one day, because there is capex overhang. That's the risk when you buy companies that are in construction. Okay, huge risk. And if you want to reduce that risk, then don't buy companies with high capex. It's simple as that. Okay, so that was the update. I would avoid buying into this until we have a private placement. And I'll see you in the next video.